Man, myth, and legend. I'm going to bring him to a panelist, promote to panelist. There he is, being promoted. I see him on there. I'm asking to unmute.
There we are, unmuted. And here we go. All right.
There you go. There you go. So
I'm going to be changing my video here in a second when it's time to start the presentation. So how are you doing, Scott? It's been
I'm doing great, Mr. Merrill Chandler. Great to see you as always. How is life there as you in Salt Lake City? Is it cold yet? Is it warm?
It's getting cold, and I just moved. So leveling up, having the opportunity to create as many opportunities to serve my tribe, serve your tribe tonight about how to stop stepping on funding landmines, right? How to literally create a fundable personal profile, a fundable business profile, so that we can all keep being getting the approvals that we're looking for.
There you go. Well, you got quite a few people following on YouTube tonight as well for it. So, Mr. Merrill Chandler, if you guys don't know, this guy is literally I've never seen anybody have such a passion and energy for what they do. It flows out. Look, it's great to learn, but it's also even greater to learn when somebody is passionate about what they're doing versus that whole the Charlie Brown teacher, which we see that a lot of times. Merrill's a great presenter, and I think you guys make sure you've pulled out a pen and paper or something to take notes tonight. And then he's also got a very special offering for many of you guys that you will not want to turn down as well for you. Steph and I speak because we're clients. We've known Merrill for years. His whole team over there is second to none when it comes to service as well. So Merrill, take it away, buddy. Share your screen and get rock and roll tonight. Okay?
All right, let's do that. I'm going to share my screen number 2. That's going to look weird for just a second because I'm going to be sharing what we're already on. There we go. And share the screen.
No, just do it here. I'm just going to.
Oh no, I'm ready to walk over. All right, here we go. I'm going to choose my new Sky. My producer is all set up, and there we go. All right, first things first, I'm going to we've got my screen shared, correct?
I see a big GF. I see a big Get Fundable logo.
The old Get Fundable logo. All right, and now here we go. How's that?
That's perfect question for you. Do you want to take questions throughout? Or do you want to wait till questions at the end, Merrill?
I think we want to take. You jump in where because you're a client. You've been through this. You've been through the book. You've done everything that I offer, right? Yeah. So if you see something that is just madly important for your tribe, then to stop me. Let's take questions at the end for everybody else, so write them down, you guys. This is good. We're going to move fast. Scott's asked me to literally compress 30 years of information into an hour-ish, right? So I want to make sure I've curated everything we're talking about today, and I call it the 3 secrets of fundability or becoming fundable. So
Merrill, you've got about an hour and a half, so you got plenty of time, so you don't have to rush.
I am now going to slow. I won't be less excited, but I'm going to slow it down. So let's continue, and we'll knock it out of the park. So I'm being told I need to switch my mic, and
your mic is good, Merrill. We hear you loud and clear, bud.
How about now, though?
All right.
Yeah, here we go. All right. So today, some of you, I've already recognized some of the folks who are here. You and I share many clients and students. And so it's an honor to be back with you, Scott, and to be able to update even the folks who haven't heard me for a minute. That there's a lot of banking. There's a lot of things happening in the lending space that is just killer, and it's kind of counterintuitive, and we'll get into that. But that's why what you see on your screen right now is there are insider banking secrets. We call them automatic underwriting secrets that will give you access to the largest pool of previously unavailable money. Now, when I say previously unavailable, this isn't hard money. This isn't private money. This is top tier bank money that's unsecured business credit lines and loans, the cheapest money on the planet, without needing collateral or tax returns or financials. All right. This is about how you and your profile, which we'll discuss in a moment, how your profile can do all of the credit approvals without you. No joke. Now, I've been committed to this space for a very long time, and I'm excited to join you guys here in the USREI network, because I want you to be able to get the funds you need to thrive and so you can do more deals and put more money in your pocket. How many of you are using credit partners or using hard money or using private money and not having the success or not creating the ROI that you'd like on each of your deals? That stops tonight. No joke. So my goal for today, this training today, is to help every single one of you see that there is a clear path, right, through the minefield of funding hazards. There's a clear path to get business loans and lines of credit regardless of where you are today. That means regardless of your current credit, there's a path. Regardless of the state of your business, whether you don't have an LLC or INC, you do have an LLC or INC, all of it is, there's a path to get you where you need to go. Now, one of the things, Scott, that for you especially, that I've become specifically sensitive to is that there are two massively unstoppable forces that are affecting real estate investors and business entrepreneurs today. Now, these forces, one of them is, the first one is economic. And what I mean by that is there is more money available right now than has ever been available for lending in the history of Chase, Wells, BB&T, any of the big banks. Now, remember, those guys have a 500-year history of lending. And each one of these are designed, every one of them have what do you call it? They have rules of engagement. And those rules of engagement create profits through interest, fees, et cetera. But they've never had more money to lend than they have right now. And so, we're going to cover what that means exactly. Now, during COVID and since COVID, there have been tons of people who couldn't qualify that normally wouldn't. The banks kind of closed or shortened, made smaller their funding target, a really important moment we're going to have in just a second. But these loans and lines of credit have become less available to the general public. But just like I said on the very first slide, these loans are available to the people who are fundable. And so we want to stop being the people who don't have money, and lenders have gobs of money. They've never had more money to lend, but there's fewer people to receive it. That's the critical issue here. Fewer people can qualify according to their lending guidelines. All right. So that's the economic unstoppable force. Whether you ride the wave or are crushed by it, the bottom line is there's money out there, cheap money out there, prime plus 1% to 2%. We're talking the 5% and 6% credit lines and loans, whereas private money is 8 and 9 and 10 and higher for hard money, et cetera. Now, one of the things that this economic situation continues to feed on itself. In 2020, the top four banks, Chase, Wells, Bank of America, and Citi, the top four banks made $6 billion in profits collectively. In 2021, they made 20+ billion collectively. So that's in the middle of COVID. you guys, and I'm going to show you some reasons why and how we can sit in that money flow, just like you see on your screen. That money flow is how do you turn on that faucet? And we'll discuss that today. So the next unstoppable force number 2 is technology. Now, I'm going to tell you straight up, you guys, lenders hate full doc manual underwriting more than you do. I mean, raise your hands. How many of you have seen, how many of you don't like full doc loans, or you don't believe that you can even qualify for those full doc loans? In fact, tell me in the chat, type yes in the chat if you have don't even apply anymore. I'd love to see you guys join on the chat and just give me an answer. How many of you love manual underwriting, full doc, all your taxes, all of your financials, all your pay stubs, etc. Right? That's not something that. No way, Jose. Thanks. So the point is what most of us, the insider secret that's to this is that lenders hate manual underwriting. In fact, I was at a FICO World. It's kind of a consortium of all lenders who use FICO for scoring and risk management. I went to a FICO World in 2019, just before COVID, and I sat in a presentation where the vice president of SunTrust Bank, which is now part of Truist, there was a merger, huge lending mergers going on. The vice president of the bank said to break even on a loan, it had to be at least $38,000. It had to be prime plus 4%, and the term had to be 36 months just to break even on a loan officer helping somebody fill out the paperwork to get approved. Those were the costs. So COVID hugely accelerated the entire process of moving more and more lenders to automatic underwriting. What is automatic underwriting? Super simple. How many of you give me a yes in your give me a yes in the chat, you guys, if you have in the last few years applied online or filled out an application at the branch and you were approved in 30 seconds to 2 minutes? Give me a yes in there. Have you been approved for automatic underwriting, right? That 30-second process. Thanks, you guys. Oh, awesome. Twice today. Brilliant. No human being looked at that application, Michelle. Not one human being. It happens. In fact, at FICO World, they brag that they boast that it takes 65 milliseconds to return an approval or a denial. That's crazy talk, right? So thank you, Susan, so much. I think that's Michaela. Let me make sure I got Michelle. All right. So just twice today. So the whole point is that automatic underwriting, it requires no human being. So it costs the lenders less. So if you're taking notes, guys, which I highly recommend, that make automatic underwriting is all about speed, efficiency, and risk management. But certain key factors have to be in play for you to get an approval. So that's what we're going to cover. Now, the second part of the unstoppable force is that at FICO World, I was introduced because of my unique circumstances. I was able to meet with the FICO FICO team that builds the software algorithms for the very FICO scores that you get from your bank or from your credit union, et cetera. And they actually, I met with the CEO of FICO, and he asked me what my business model was like. And I said, I help borrowers become fundable. I help them meet lender underwriting criteria. He goes, tell me more. And I said, you help lenders to protect their interests, I help borrowers become fundable. It's a perfect marriage because FICO's clients are lenders. And he said, let me have you meet with my score development team. And that's how I got to spend 2 days and several meetings with the group you see on the screen, literally going over what the personal and business fundability metrics were, so that I could bring that home and build and improve my software that I use to help you become fundable. So FICO basically opened up their door. They made me sign not power of attorney. What's the damn thing called? They made me sign a non-disclosure agreement so that they could let me get under the hood a little bit. Now, I don't know the algorithm itself, but they answered 100+ questions about how to make your profile and make you more attractive to lenders, so that in automatic underwriting, you get a yes. But if like Michelle and Susan, if you guys are already getting yeses, how much are you being approved for, and how much can we improve? How much more can we get approved for and use it well, right? So that was I'm going to expose one of the biggest lies about credit and credit scores tonight. So hold on, buckle in. Now, real estate and business entrepreneurs face some big challenges, right? The lack of capital, we've been talking about, super expensive alternative lending, hard money, private money. Now, real estate investors and entrepreneurs are risky for lenders to lend to. And so how do we work around the fact that you are a type of business that, unless it's a mortgage, they're not very interested in giving you unsecured business lines of credit or business loans. And so how do we make this work, right? And I don't know about in your area, Salt Lake is crazy. The inventory is moving super fast. How do we have like a credit instrument, like a credit line, where you write a check and you do the deal fast, so you can take down a property quickly? In your guy, many of you are into notes. How do you buy a tranche of notes and make an offer quickly, right? So if nothing else from tonight, you are going to be able to stop stepping on the funding landmines. And in the next few minutes, I'm going to show you the biggest and most damaging funding landmines almost every real estate investor makes without even knowing it. Now, a little bit about my background. How did I get here? Well, in 2008, everything changed, right? But most of us recognize the big changes in mortgage lending, right? Gone were the ninja loans, right? The no income, no asset or job required, no job or assets required. So, but in 2015, I was expanding my business and I had focused on my Paydex score. Many of us have probably heard about a Paydex score. Well, the Paydex score was a big deal pre-2008. But after 2008, I thought I had a great Paydex score and I went to get a business loan and I was denied. And things had changed more than I even thought was possible. So having gone to, in 2016 is when I went to FICO, met with the score development teams, and I created, I've devoted, Scott, it's no joke what Scott said. This is my jam. I love making people fundable, making their businesses fundable. I'm a dot connector and making an insider seeker, looking behind the curtain of what's going on. This is the matrix. I'm the Neo of the credit matrix world. So I created a blueprint that would protect my clients from the funding failures that I had. I was climbing the wrong tree when I thought of using my Paydex score to get to get approved. And when I put together when I put together this blueprint Every single time we implemented it, for every client, every student who implemented these steps, I'm telling you, it worked. And now I'm bringing exactly what we learned to you. Now, I discovered the key to unlock the secret to business funding in any economy. And everything it's up and down, back and forth. There's so much movement going on out there. The question is lenders only make money when they lend. And so the bottom line is, how do we hit that funding bullseye? Well, one of my clients, she's in the note space as well. And this, in her own words, this was what she had to say.
I did what you said to do. Just a couple of things, and my score went up 30 points right away. And so within 6 months, my score went up over 100, and I was already in the 700s. So my score's nearly perfect now. And they all line up, and I was able to achieve, a $500,000 unsecured line of credit my first time out of the gate with my first bank. So that really put me in a position to change the game that I'm executing to change my retirement strategy. And in fact, I actually used the line of credit recently for the first time, so it put me into $1 million asset that I would not have been able to secure. And in fact, the bank, I was putting all the documentation together, and they called me and said, okay, we're done. And I said, don't you want the paperwork? And they said, no, your credit score is fine. In fact, it's unusually fine, so we're just going to give it to you. We don't need any more paper, and it'll be an unsecured line of credit. So $500,000.
No matter how many times I hear this story, it's first of all, Teresa is a jewel, and she has worked so hard using this credit line to actually establish all of her results and the different tranches she's purchased to pick up more and more assets with this credit line, which has grown since 500. But this was the most impressive part of her testimonial. But I wanted to share it with you because she proved that this model worked perfectly, right? Now, if a result like this could change everything for you, type yes in the chat. Would you like $100,000, $200,000, $300,000 in that? If you're getting this, just tell me yes. That Michelle says yes right out of the gate, right? Would this help you in your business, right? Of course, absolutely it would. So now the question becomes, how do we? There we go, Jim. Oh, hey, Jim, how's it going? So what we need to know is that I took a long, hard route to get here, you guys. I stepped on every funding landmine that exists, but I discovered this the hard way, and you get to cheat, and you get me. I'm going to deliver you the beginnings of the funding formula here tonight. All right, because you're here, you get to do it the easy way, because I'm going to compress time for you. I'll take all those years of trial and error, and I'm just going to tell you what actually works without any of the fluff. Now, over that 25 years and 3 recessions that I have gone through this mad experience, I've learned some very key beliefs. Let's call them limiting beliefs even. And real estate investors, many of you may ring true to you as well. Most real estate investors do not know why their businesses aren't fundable. Yes, you can get a mortgage, but where's that $500,000 business line of credit? And to get a business line of credit, is it secured by real estate? Do they offer you unsecured business lines of credit or business loans, right? You don't know why the business is unfundable. You don't know what the priorities are for lenders or how to get approved. I'm going to tell you that tonight. And you believe that you need to do full documentation. You do manual underwriting to get approved for top tier bank loans, for business loans, right? A huge belief that many people here tonight. hold. And then you believe that you have no control over the funding approval, and you're subject to the lender's whims. How many of you feel somewhere in the back of your mind there's an adversarial relationship between you and banks and lenders? It's like, they got all the money, I'm a good person, why won't they give me money? Why am I getting turned down? Right? Those are the very things that create the animosity. What if lenders want to partner with you? You just don't know how yet. Again, that's what we're going to reveal tonight. And many of you have been lied to about how business credit works. Again, we're at a whole section tonight on business credit is not what you think it is. And we're going to do a deep dive into that tonight. Now, over the last 25 years, over the last 5 years, I've helped real estate investors just like you get over $192 million in approvals. I'm so close to pushing that 200 million mark. It's amazing. But look at that, what you see in yellow, over 53 million in approvals during COVID since March of 2020, a year and a half ago. How do we get $53 million within this last period, right? It's because of 3 secrets. And I'm going to share with you what those 3 secrets are. Write this down or take screenshots, whatever it is, so you can document what we're talking about. Number 1, and this is huge, you guys, it's the biggest thing ever. This one thing will change your entire life if you will hear it and take it in. But it's so big that you might not comprehend how difficult it will be to change your thoughts and beliefs about it. Secret number 1, you've been lied to. It's not, never has been, and never will be about your credit score. It's about your fundability, the ability to meet lender criteria. Let me give you an example of this. So many people would for these credit scores because you believe credit scores matter. All right. Well, what if they don't? What if your score isn't even used until you're approved? Stay with me. So we think this is a great credit score, but this credit score, what we found when we got under the hood of this profile was that he had one $5,000 credit card from a credit union, and he was a real estate investor. He had Lowe's, Best Buy, Home Depot. Sounds familiar, right? Well, what a high credit score means, what credit scores like that means, is you will get more of what you've already got. Let me say that again. A high credit score means you will get more of what you've already got. You'll get the best rates, the best terms of what you've already got. Well, what did he have? He had a small local credit union, $5,000 limit, and he had retail cards. That means he can go to any retail outlet at a mall or online and get approved. That's what it means. But listen carefully, you guys. He will never, ever, 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 ever in the universe get a $50,000 business line of credit from any top tier bank, any credit union, anywhere, based on his Home Depot reputation. It is not going to happen. It has never happened. And the problem is some of us get approved and we don't know why, so we think it's our score. And there's a Latin term called post hoc ergo propter hoc. It simply means that just because it came before doesn't mean it's the result of what came before. I know that's Latin and weird for me to bring up. But the point is you look at your credit score on your approval and said, I have a good credit score. No, you did not get approved on your credit score. You never have, you never will. Okay? Credit scores are not going to get you an approval. Listen, take a screenshot of this. Make a note. Your credit score is used after you're approved to determine your interest rate and your loan amount or your credit limit amount. Period. It's used after you are approved, you guys. Your fundability is what gets you the approval. And over 90% of all personal and business credit approvals rely on data from one company, FICO. FICO is the gold standard for evaluating the risk of how much money to give and how long the term should be and what the interest rate. It is not used for your approval. Perfect example. Here's a picture of me with Will Lansing, the CEO. That's why every step of our system, every strategy we implement comes from what we learned from FICO. And I can spend hours telling you how awesome my relationship is, the strategy meetings I've had with the CEO and the score development teams, as I mentioned. And because of my relationship with FICO, I've been able to weaponize your ability to get approved. So many of you, this makes it easy for you to know someone who has a seat at the table, right? How cool would it be to have a seat at the what gets you approved table? Anybody want to give me a yes or hell yeah? Because you guys, if you have a seat at the what it takes to get approved table, we can keep you in the pocket of being able to be fundable. Right? So, absolutely, Michelle. hell yeah. Thanks, God. So, yes. Now, here's some simple facts that are really powerful. I have a FICO liaison, and I meet around twice per month about what's going on today in business financing. What's happening with business lenders. I go to every FICO world. I've been invited to 3 so far. And I'm really the only borrower-facing organization and rep. Everybody else is lender-facing. And we are all about the borrower education. All right. I sit down with lender underwriting teams and the creators. Because I'm at FICO, I'm introduced to lender underwriting teams and meet with them saying, what would the perfect borrower look like to you? They are happy to share, you guys, because I'm one of them. What does the perfect borrower look like? Who's your perfect customer? Line it out, line it out, line it out, line it out, line it out. I'm like, thank you very much. Thank you very much. And then I bring it home to my students, my clients, to you. Everything we're talking about today came from those meetings with FICO. Right. And then part of the reason why this even matters is that since I literally have a seat at the funding table, I'm on the front lines of these funding approvals, and we get to help. They tell me now, right now, I attend lender conferences where they're talking about policy movement. And I get to hear from the lender perspective the moves they're making. And then I get to come home to my tribe and say, you know what? This is what we need to be prepared for the next quarter, for the next 6 months, for the next year. And you would not believe how much cool intel we have that is protected. Real estate investors, business entrepreneurs, just like you, protected you from the mishaps that are going on out there. All right. So, insider secret number 2. If it's not about your score, what is it about? I said it's about your fundability, but what is fundability? Funding approvals rely solely and exclusively 100% on your borrower profile and your borrower behaviors. I've never even heard those words put together in a sentence before, Merrill. Right. Because real estate and business entrepreneurs get denied funding because you don't know what the borrower profile should look like, what your borrower behaviors should look like. And if you do, it triggers automatic approvals in any economy. So what do I mean by that? All right. So let's look at funding guidelines during prosperous times. Right? Funding guidelines, it's a target. And they'll approve these outer ring approvals because as an economy, unemployment is low and prospects of employment are high. There's no dips and valleys and problems going on out there. So they expand they expand their funding criteria. It's easier money, and we've all seen this. If you guys have done any of this, you will see you've been through as many ups and downs as I've witnessed, right? That you've watched the recessions shrink the credit markets and expand the credit markets. Now, when you optimize your borrower behaviors and your borrower profile, what you're doing is you are creating borrower behaviors that are super tight, a scatter group. So how many of you have sighted in a rifle? Anybody say yes? If you've sighted in a rifle, just give me a shout out. Because what's fascinating is when you sight in a rifle, Barika or Sharika, holy hell. There we go. Thank you, Barika. So you sight in a rifle, you don't move the target and you don't move the gun, right? Yes, Michelle. You move the sights, you move the little tiny, the little tiny screws and gauges and adjustments so that the sight and the target where you're hitting hits the same thing. That is what we do together. We adjust your borrower behaviors. We sight in so that you are super high fundable. Now, here's what happens. When you do this, remember, FICO, your score goes up. FICO rewards you with higher limits. Instead of getting a 5 or a 10, you get a 20 or a 30,000. Instead of getting a 26%, you get an 18% or a 16% credit card. Instead of getting an 8% loan, you get a 5.5% credit line. All right. So that when you sight it in, you're more trustworthy. Lenders love you when you are hitting that funding bullseye. Right. Now, here's what happens. When COVID hits or the next recession or whatever the hell's coming at us, you guys, when they shrink the target, you're still fundable. Tell me you guys understand. Tell me you're getting this. Are you getting this? Give me a yes if you get what I just said. This is vital that you understand where we're coming from. Michelle, yes. RJ, yes. Anybody else? Do you understand that they will shrink the target again, you guys? And it's currently shrunken. David, Kevin, absolutely. They've shrunken the target. And now if we were getting approved out here and they shrink the target, you guys, we are no longer fundable and we'll get even more no's than we got before. So recession lending, they shrink the target, but having the right borrower profile and behaviors will keep you in there. So what are some of those? What are some of the things that we talk about? Here's a list of a bunch of them. If you can squint and see, notice there's number four, lack of recent installment loan information. Number 6, too many consumer finance company accounts. Any retail card you get docked on. All of those small store cards right here, you have too many and you get docked on those. The number 11, amount owed on revolving accounts is too high. Number 18, number of accounts with delinquency. Or 17, no recent non-mortgage balance information. There are over 140 or 150 that lenders and FICO uses. FICO uses approximately 40 borrower behaviors, and lenders choose from among those same 40 as well as 110 other ones. We optimize for all 150 borrower behaviors. Okay, so that is how when you have the right borrower behaviors and the right borrower profile, it's easy to get cash money, business loans, and write a check, do a deal lines of credit. Up to $1 million in unsecured stated income, true business credit, you guys, because your scatter group is this big, not this big. And that is how every one of my students and clients have been able to be part of that 53 million in the last year and a half alone. It's been crazy. Now, remember back to the economic, the unstoppable force number one. The unstoppable force number one says the banks have more money than they know what to do with. Gobs of money, 4 times more this year than they had last year. Who are they giving it to? Super tight scatter group borrowers. All right. Now, the third secret. Now, I hate using the term hack when it comes to banking. It just doesn't land well. But my number one funding hack is that real estate investors get big money approvals when you create a highly fundable business, which can be done in as little as 24 hours. But the key here is a highly fundable business. So get ready for screenshots, get ready for notes, because I'm going to reveal, number one, what it means to be a highly fundable business. And let's talk about the nature of business credit at first. There are 3 types of business credit. And remember I told you about the fixed beliefs everybody has? Those fixed beliefs, I'm going to blow some of them up right now. Number one, this first column. Paydex, since 2008, stopped being involved in the approval of what I call cash credit lines and loans, meaning tier 1, tier 2 banks, Chase, Wells, BB&T, PNC, everybody, they stopped using Paydex Score since 2008. Paydex is used if you want vendor credit or retail credit. If you want a commercial credit card from Home Depot instead of a personal credit card, they may look at your Paydex Score. If you want a Lowe's, if you want a Staples, if you want a Uline account, if you want a gas card, that is this left column. And it's rarely above $100,000 to $150,000, because who wants $150,000 in Uline accounts, right? Now, it's not personally guaranteed, and they do it with automatic underwriting, meaning no human being is going to look at you, right? The third kind is what's called true commercial credit. Now, if somebody says the term commercial credit and includes 0% interest, run, because they are lying to you. It is not commercial credit. Commercial credit is $1 million and higher. There's no personal guarantee because it's on your business, but it's full doc manual underwriting. And to even qualify, you for 5 to 10 years, you have to be doing $3 to $5+ million per year to even qualify. And it is secured 9 times out of 10. But many times there are ads out there, people who look up for business credit. You're like, commercial credit, interest-free for up to $250,000. Those are credit cards to run away. That is not, you're being lied to. What we do, especially, is FICO-based business credit cards, business credit lines, and business loans. These are between $100,000 and $1 million. They're from top tier banks. There is a personal guarantee. That's also what changed in 2008. Cash lines are always 100% guaranteed, personally guaranteed, and they use automatic underwriting. Many times they'll revert to manual underwriting if you're not fully fundable or don't have a fundable profile. But take a look at this. That personal guarantee, I've had people come up to me and go like, Merrill, my personal credit sucks, so I want to get credit on my business. No such thing. Paydex relies on your personal profile. Business, your commercial credit, they want to pull your personal profile because your personal profile, guys, Think of it as the goose that lays golden eggs. Your personal profile is the only thing that shows any lender your attitudes and habits of how you treat other people's money. We call it your financial reputation. And your financial reputation is broadcast by creditors to the credit bureaus, collected by the credit bureaus, scored by FICO, and broadcast to other lenders when they pull an inquiry on you. But so these are the three types of business credit. So when I'm talking about $100,000 to $1 million credit lines, if somebody mentions the word Paydex, they're not talking about credit cards, credit lines, and business loans, you guys. They're not. They're talking about vendor credit, but they will use, yet it's not in your personal name. Well, if you need $20,000 in gas cards, go for Paydex, go for it. But you're not going to get unsecured business lines of credit from top tier banks. You're not going to get it. It doesn't happen. It's not out there. Okay. Hate to burst anybody's bubble, but you always count on me to bust the bubble with the truth. Okay. Now that we know what business credit is, let's talk about that middle column and how secretaries of state nationwide are totally screwing you over. I'm going to tell you right now how. First of all, these are red flag words. These red flag words, so the federal government requires that all states assign a business code to every LLC or INC or PLLC, every type of entity. The Secretary of State is designated by the feds to assign a code to it so they can track where the business growth is in which sectors. Everybody with me? Everybody with me? Now, each one of these codes corresponds to the words you use in the name of your business or in the business purpose. Every one of these words, if it is in your business name, it makes your business automatically unfundable to lenders because you are now in a prohibited code category for unsecured stated income revolving loans and lines. You can get a mortgage. You can get a commercial real estate loan. You can get any kind of secured anything you want using any words you want. But the most precious credit instrument of all lenders is the unsecured business loan and business line of credit. You will not be, it's very unlikely you're going to be approved for those types of credit instruments using having these in your name. All right. So let's watch how this process happens. First of all, you go start an LLC and you think I'm a real estate investor. I'm a note buyer. I'm going to Notes R Us or national notes and notorious nincompoops, whatever it is, right? You fill out your articles of organization or incorporation. INC or an Inc. is a corporation, an LLC is an LLC, right? INC or LLC. You fill out your corporate and you put in your things. I laugh because one of the first three words there, real estate property resources, one of my clients came to me with those three words in the name. That's what the name of his company was, real estate property resources. I decided to put all three of them in there because he was triply unfundable. So when you fill out that application, most states don't ask you for you to put in your business code. The Secretary of State is supposed to do that because we're not supposed to be in charge of our own codes, apparently. So Secretary of State fills out and assigns you real estate investor code. Let's say a note buyer code. And they're called SIC codes, stands for a standard industrial classification, or NAICS, which is North American Industrial Classification System. Those codes are assigned to you behind your back, straight up behind your back. And each one of those codes automatically puts you in an unfundable category. Well, here's what's fascinating. Business credit lenders have a database of the Secretary of State to see if your articles of organization or incorporation are on file. And what do they see when they pull that document? They see your SIC code. They see your business code. Let's just call them business codes. They see your business code. And all of a sudden, have any of you ever, I'd like to see a yes or a no on this, but have any of you ever set up a business checking account, and they're like all happy and everything, and they start filling out the paperwork, and then they ask you what your business name is. You go, I'm real estate property resources. And they're like, all of a sudden, it's like their whole countenance changes. They are no longer happy to open an account for you because you're automatically unfundable. Has anybody ever had that experience? Because I know grips of people who all of a sudden, the personality just changed. The engagement literally changed while you were filling it out, and nobody knows why. You don't know why. You're just like, why are they being terse and curt with me now? Right? So, thank you, Scott. I guess it's you and me. So credit the lenders look up what those are. Sometimes, how many of you have been in there where they ask you, so tell me the nature of your business, and you go, real estate property resources, and they start asking you probing questions about what you do. If it wasn't assigned by the Secretary of State, or if it's not available to the lender in their software in that state, they will ask. In Utah, lenders ask. And so maybe it's to confirm, I don't know. But I'm sitting here, I was in Chase going through this process, and the wonderful business specialist was filling out paperwork and opening a business checking account for me. And as she went through that process, so what do you do? What do you do? What do you do? And probing questions. And I said, my SIC code is blank, and my NAICS code is blank. And they're like, she's like, oh, thank you very much. That's why I was asking. Has anybody been asked questions, probing questions while you're filling out your business? It's just a checking account. It's not even a credit card or credit line. All right. So those are the problems. Now, the other thing is, is that your business. Thank you, Michelle. And there we go. And Scott, thank you. Chase and Wells did, right? So business credit reports then look at the state records and also get reported by business credit lenders, and they start documenting. If you go right now and you buy your business credit reports, there's Dun & Bradstreet, Experian Business, and Equifax Business are the three. If you buy those credit reports, you're going to see codes that are reflected, because they'll have the SIC code and the NAICS codes will be in. They will reflect the name of your business. So we've got to stop this. We don't want anything done behind our back. They're automatically making us unfundable behind our backs, you guys. That's not okay. So type yes if you learned something new tonight for me. Anybody? Have you learned anything about how to dial in your? We got a wow from Kevin. Scott, thank you, guys. All right. Oh, I don't bank at those. I bank at credit unions, the local state banks. Thank you, Michelle. They do the same thing. They report to the business credit bureaus. Jim says yes. RJ says yes. Absolutely. All of this is happening now behind our backs. But your borrower behaviors are being measured behind your back. You've been told your credit score matters. It doesn't matter until you're approved. You've been told that you're being assigned. You're being put in the unfundable category out of the gate. You guys, Kenneth says yes. RJ and Susan, thank you. So now, just a simple question. If you did what I'm teaching you and you became fundable instead of counting on a credit score, if you focused on the what lenders are looking at, if you aligned your borrower profile and behaviors with approval guidelines, and you made your business a fundable business instead of an unfundable business, do you think you could be successful? Any yes out there? Without a doubt, says Michelle. Yeah, right. This isn't rocket science, but I want us to understand that it is simple. We just have to pull the right levers and and sight in our fundability gun. Right. The result of doing what I'm sharing with you tonight is that imagine getting $300,000, $400,000, $500,000 or more during this economy. What would that do for you? How many notes could you buy with $500,000 more dollars? How many fix and flips can you do with 3, 4, 500? I have clients who've had 700, 920, and $1 million approvals. How many of us would be able to? How many of us would that change our lives? Right. So here, this one's an easy. I had to use this. How many of you think this is pretty exciting? Raise your hand. Type yes if you think that this is cool. If this is cool, right? But yeah. Thank you, Kate. Yeah, hell yes, it is, Gerard. But I want to be fair. Admit it. Don't be shy. How many of you feel like you've been drinking out of a fire hose? I have been accused before of literally just blazing through this amount of information, right? Kay says, oh, we've read your book. All right, Kay, thank you. Awesome. So is it okay if I share with you guys something special that I've created because you've joined me at Scott's event? I've been doing events with Scott for years, and it's been a year and a half, 2 years since we've been here. I prepared something for you. Would it be okay if I share something with you guys that is going to make your day? Right? All right, Michelle, you got it. Kevin says yes. I'm offering you guys a live interactive, it's streaming, but it's live, it's not a recording, boot camp that is going to be on November 5th and 6th, 9 a.m. to 5 p.m. Mountain Time. That's 11 a.m. Eastern and 8 a.m. Pacific. It is a boot camp that is designed to create fundability by implementing all of these changes that we've been talking about. Now, who this has worked for is, it doesn't matter if you're new or experienced real estate investors or note investors, whether you believe you have bad credit. See, you guys frame everything differently than I do. You might believe you have bad credit. You might believe you have good credit. It works for both. Whether or not you need a qualified funding entity or you already have a fundable business, it works for all of us. All right. Now, this boot camp, you will walk out of there and you'll be able to stop having lenders reduce your credit limits or close your accounts due to economic or recession worries. You're going to have deals stop slipping through your fingers because you don't have the capital to take down the deal. You can stop feeling uncertainty and stress of not knowing you'll be approved. How many of us fill out an application and we're just, whether it's stress or there's just that low grade background annoying that we don't know the result, right? And you can stop, especially paying an arm and a leg for interest rate on hard money, private money, et cetera, because you're getting the cheapest money in town. Now, when I say paying an
arm and a leg. I call it body part pricing. How many of you pay body part pricing for your money? Stop that. We're done with that. Lenders only make money when they lend. They want fundable borrowers. You become a fundable borrower, they will give you money. Do we see how simple this math is, guys? We just have to be fundable. And that's what the bootcamp is about. And especially, guys, you can stop sharing profits with private money or credit partners. You get done. We're out. Done. Okay? So what you're going to get day one, there's 2 days. We're going to weaponize your personal and business credit reputation. First thing we got to do is show you how the personal credit game is played, how the business credit game is played. You're going to learn how to establish and protect a borrower identity that builds lenders' trust. If you pull the credit report right now, you have multiple versions of names, multiple addresses, multiple everything. That doesn't create trust in a lender in automatic underwriting because it's an algorithm just looking to see who they're going to lend to. You can implement effortless borrower behaviors that trigger these automatic approvals, you guys. These are not hard things. You just got to know what they are. Discover easy to use account strategies that build lender confidence. How would you like to know how to pay your bills that actually gives you more cred with your lender? Because paying, I'm going to tell you right now, paying early doesn't build confidence with your lender. We'll talk about how, what to do. I promise you, if you pay your, and people hate me for this, but they follow my advice from the boot camp, and they're like, Merrill, I didn't understand why, but this works because algorithms measure things that may feel counterintuitive to us. We think we're being a good borrower by paying our bill early. It doesn't mean anything to the algorithm or to your credit approvals. I will show you how to build lender confidence doing it the right way. See, you can compare, you can see in the bootcamp, you will be able to see how you stack up against lender guidelines today. I'm going to literally show you lender guidelines and show you where you are and then what to do about it. Whole roadmap. And I'm going to show you little known debt shifting strategies that is going to help you access new capital and eliminate any high balances you have on your personal. Does that sound interesting to anyone? Just what we talked about there? That's only day one. Does that sound interesting to us there? Michelle says yes. It's you and me, Michelle. I love it. Thank you for sharing, because you guys, these are crazy important and they're easy. You just got to know what they mean. Now, on day two, we're not done, because day two, I'll show you what the biggest landmines, the 8 biggest mistakes that you're making that make your business, and it's beyond just your business code. You're going to learn how to detect I'm going to show you how to tell the difference between real business credit and poser business credit. I'll give you an example. Spark credit card, you think you're being a good borrower, and you think you're being a good borrower, and you get a Spark business card, but it says business on the card, but it's on your it reports to your personal profile and is ruining your utilization. I'm going to show you how to detect bogus business credit and find the real ones, right? You've totally been lied to about this. We're going to discover unfundable business types and codes and how to fix them, all in the bootcamp. 30-minute strategy that can imagine one strategy that will turn $100,000 into $1 million. I'm going to show you what that strategy is, how to get your first 100 grand, and how to leverage that into the million. We're going to discover life-changing funding entity strategies that solves your funding problems forever. I'm going to give you a little tiny preview of this. Imagine having a funding entity that lenders love to give money to, and that you then fund any deal you want. You set it up right, you will have money for any future endeavor for the rest of your life. And we talk about it all in the boot camp. We're also going to weaponize your funding approval factors. We're going to look at your PCID, your personal credit identity, that derogatory accounts, revolving account portfolio, installment loan portfolio, negative indicators, inquiry usage, utilization history, 24-month look back period. We're examining all of this and worksheets. It's more of a workshop than it is a boot camp, right? All of this stuff we do. We do the forms and find out exactly how you rate. We're also going to talk about weaponizing your borrower profile and behaviors. There are different values of different accounts and different values of lenders. We're going to create an entire model for you to understand how to build spectacular borrower profiles. And we're going to weaponize your business fundability. Imagine being able to come out of this and forecast within 3 to 6 months of having your $1 million. I didn't say get $1 million in 3 to 6 months. I'm saying be able to estimate based on your business and your personal fundability, be able to estimate within 3 to 6 months when you're going to pick up $1 million. We will discuss that. All of this. If you went to my website right now and chose to buy these courses on their own, recorded, no interaction, no Q&A with me, no live engagement, they're each $1,997 for a total of $3,994. Now, if you could get $100,000 or $2 or $3 or $500,000 by using that multiple strategy, how much is this worth $3,994? Give me a yes. You know it. Just admit it. Is this worth it if you could get that? Right? If I kept my promise and you could get that, would that be worth it? Yes, absolutely. No question. Well, here's the deal, guys. I'm giving it to you for $97. Come to the boot camp. Go to getfundablebootcamp.com and register for this boot camp. You'll see it there in the chat. Open up a separate browser. Stay with me. There's a $97, and then you can see there are other options that include recordings, that include bonus stacks. There's there's strategy sessions with me. It's all there. But $97. Now, I'm going to even make it more powerful. If you are not happy with the funding strategies you learn by the end of day one, I will get whatever you paid for your ticket. I will give you 100% of your money back. 100%, you guys. Because I want this to be risk-free. I made some really big promises here. I've given you 3 massive secrets that only FICO insiders know. Nobody knows about borrower behaviors. Have you ever heard that term before you met me or watched this presentation? Except for you guys who read my book. Have you ever heard most of these terms? Business codes. I mean, you guys, this is all insider stuff. And I want you to know in your own mind, all right, I'm going to go for it. And that the only question really is it worth gambling one day? Yes, it is a 2-day event, but you only have to invest 1 day to see if it's worth it right now to learn how to become fundable. What is the fundability path you're going to be treading so you can do more deals? If it's half of what I've said, it's going to knock your socks off. Okay? And I have gobs and gobs and gobs of people. Go to getfundable.com, scroll down, and you're literally going to see like 8 feet. If we were scrolling and measured it, you're going to see 8 to 10 feet of reviews of this boot camp, just like this. I've attended many seminar boot camps in my day about real estate investments. funding and how to be fundable. But never in my life have I been to one that totally changed my point of view about a subject. My jaw is literally on the floor. My eyes are completely open now. And according to Merrill, we have only touched the surface. Today was truly mind-blowing, and I cannot wait for tomorrow's session. I just want to say, this was after day one, you guys. I just want to say thank you to Merrill and his crew at Get Fundable for sharing your knowledge with me and everyone who attended the boot camp today and for letting me into your tribe. I truly believe from this day forward, my life is going to be for the better. Just read these, take a screenshot of them, read them later. Page after page after page after page of reviews. I want you to come and join me at this boot camp. And the bottom line is it's only $97 to be able to attend. Whew. Now, I want you to take a screenshot of this, or Sky, if you'll drop it, Scott, drop it into the chat. Here's my free gift for staying to the end, because we still have, most of us are still here. Congratulations. That means we're talking a similar language. We have similar values. So how would you like to get the full fundability checklist? Type yes if you would like to be able to see what it means to be fundable. What are the steps to become fundable? Anybody there? Kevin says yes. And Garrett and Kay and Barika, well, there you go. Take a screenshot of that. Take a screenshot of that. Or it's there in the link. Click it in a separate browser. Getfundablechecklist.com. You're going to see all the things that have to be done to become fundable. Now, if you review that checklist, and for some of you who've already read my book, if you've read my book and you haven't been to the boot camp, come to the boot camp, because the book is, and the checklist is about the things, the strategies are in the boot camp. So I'm here to help with any questions. What are you experiencing and what situations can I help you with? Let's open it up there, Scott.
All right. One of the questions from online is, what if you have an entity with your forbidden words? Do we need to get a new LLC?
No. Well, the first rule is don't do anything, because in the boot camp, we're actually going to describe the steps required to make that move further down its fundability path. You do not have to start a new LLC necessarily. I've got a checklist. We're going to review a checklist of what your entity needs to look like for it to be fundable and what to do about it. Great question.
Good stuff. Good stuff there. How long does each day run?
It goes from 9 a.m. sharp to approximately 4:30, 5 o'clock. So it is a mountain time. It is a full-blown go for it weekend. So I want your full commitment, your full attention. But for those of you, if you go to getfundablebootcamp.com, you'll see that there are options to be able to get recordings. If for some reason you're unable to attend both days, or you need, trust me, my most popular version include the recordings, because people, it is a fire hose. I have students who've been 5 and 6 times to the boot camp just to take it in, because there's so much powerful information. But guess what? You guys don't need more information. You need something that's going to help you transform your fundability. That's what the boot camp has done. We do worksheets. We compare your situation to underwriting guidelines and evaluate through and through. So that's what the boot camp is about. It's a workshop to get this done.
Yeah, I will vouch for that. People, I've been through it. It's one of the, I say, required workshops if you really want to do well in real estate, no matter what type of notes you're doing or real estate fix or flipping. It is the best bang for the buck that you will walk away with, especially with the first day being on your personal. It was eye-opening. The first 30 minutes of it was worth the cost of admission for it, based on a lot of other things there for you. So Michelle asked a question. We have a new name saved that includes NE. I don't know what the NE stands for. Should we remove the word from the name before registering?
remove the word from the if you've chosen a name but you haven't registered it with the Secretary of State, I highly I would wait till the boot camp if you're going to go. It's 2 weeks away. Find out all the parameters, because I'm just telling you about the name. There's a whole bunch of things that are going on your business that can make you unfundable. They may not apply to you, they may. But if you can wait 2 weeks and join, absolutely. If you're going to do it without me, then yes, definitely take the offending word out of the business name and out of the business purpose. But I would hope that you can come and glean all of this knowledge, all of this powerful transformative work to make your personal profile and your business profile fundable.
David asked, do you have record boot camp? Are the recordings included with the 97?
No, they are there are 3 ticket prices. The 97 is just the single price if you just want to attend. If you want all the other bonuses, there are other ticket prices that you can get those for.
Yeah, check it out there at the getfundablebootcamp.com.
Getfundablebootcamp.com.
All right. Okay, so Kay says, I'm having a problem with our primary residential lender. NationStar will not report our credit on TransUnion and Experian. I've asked them repeatedly to add our loan trade lender credit. Always make our payments on time, etc. Any suggestions? I've been requesting the report for months.
Well, okay. One of the things you're going to learn is that some lenders do not report to all 3 bureaus. So the question, if you've asked them, they might be saying, I'm sorry, we only report to Equifax. If they only report to Equifax as part of their system, there's no way they're going to add that. And that's a bad thing, I'm sorry to say, because the distance between your scores, the more on-time payments you do, your Equifax score is going to go up and up and up, and your TransUnion and Experian are not. So that there is no, unfortunately, there is, other than a refinance or the first question you got to do is find out if NationStar. I'll give you guys a sneak peek of some highly valuable intel from the boot camp. I challenge my students and my clients, never take anything as true until 3 different people have given you the same answer. Now, I didn't say call 3 times. I said until 3 different people have given you the same answer. So what I would speak with more people than just Mr. Cooper, unless Mr. Cooper is a private lender who's not reporting your profile. Maybe I need more information on that. But great question.
NationStar changed its name to Mr. Cooper. So Mr. Cooper is a big lender servicing company out of Dallas.
Okay. We've got to find out if it's policy or personality. Policy, and this is another hint, you guys, just more valuable intel. Policy is what they do as a company. Personality is what that loan officer or that person says and talking out the side of their mouth, right? You got to determine if it's a policy of the company to only report to, or if you're talking to somebody at NationStar, Mr. Cooper, and they're like, yeah, we only report to 1 and hang up. You got to dig a little deeper. But if you keep asking and you keep getting the same name, I could start reports to all 3. I swear it reports to all 3. It may not. There are some big servicers that do not.
Yeah. Merrill taught me a secret with it being a note investor about adding mortgage credit, because I haven't had a mortgage on my credit for years. And so what I did is I actually have a property. I owner finance, my entity owns it. I owner finance it to myself. And then I pay my servicing company to report it to the credit bureaus, even though I'm paying myself, but it's boosted credit doing that as a secret there. I mean, you saved us, I can't tell you how many thousands of dollars when we refinanced, and then when we buy new cars, and the importance of having all sorts of different things, ways structuring it and getting things cheaper. I mean, it's been
imagine, I won't give it away now, but imagine saving $2,000 to $3,000 minimum for every new car loan, not just on the financing. $2,000 to $3,000 per car loan for the rest of your life. That's worth 97, 197, 1997, guys. There's one question here that says, it works for other types. Yes, Kevin, it works for every kind of business, every type. You can be fundable as Kevin, and then you can do any kind of business that you would like. And I'll show you how at the boot camp. And when asked, what do you say your business does? I help borrowers become fundable. We're all about borrower education, Susan. I'm here to help you become fundable. And then Michelle asked, if we chose the gold level, what options do you offer to upgrade to platinum in the future? All platinums have to be done, have to be ordered, not scheduled, but you have to select platinum before the boot camp starts. I have to know my schedule because you're meeting with me and I'm running a multi-million-dollar operation and I want to talk to you, but you got to be committed before the boot camp. There is no after the boot camp platinum options. All right. And then, okay, never get any suggestions. It is their personality. I've talked to at least 8 people.
She's talking about Nation Star.
They do not say anything about not reporting to all 3. They're hard to work with about everything. I am sorry, Kay. That is that I'm giving you the secret. It's servicer. Oh man. Come and find the secret language of lenders. Now, servicers are a completely different animal, but some of the same strategies will work. Brilliant on Scott's mortgage strategy, right, Michelle?
Absolutely. That was actually Merrill's mortgage strategy. We just put the things together, and he shared with that aspect of things. And
yes.
so.
Thank you for that, Scott. And here's the thing. I answer questions just like this. There are over 30 strategies we're going to cover in the 2 days. And after every strategy, we do Q&A just like this. Well, what about this, Merrill? What about this? What about this? How do I apply it here? What's this over here? For given the information that I have, I give you everything possible to answer your question as much as I can. So go to getfundablebootcamp.com and and join me in 2 weeks. We're going to knock this out of the park, you guys. We're going to have so much fun. So Susan's asking, no, when I'm asked by a bank, what should I say my business does? I don't know what your business is yet. Kay's going to join me. Susan, come to the boot camp and I'll show you how to talk to the lender. I'll show you how to position your business. I'll show you how to set your business up so that a lender looks at you and says, I like you. Let's talk shop. So thank you, Michelle. Glad you're going to be there. You guys are going to have a blast. I don't know, Susan, I don't know what to tell you about your business because I don't know what business you're in or anything else about it. Notes private lending, that's going to be unfundable. But I told you that we talk about creating a funding entity that lenders lend to, and then you fund your notes and private lending. But we got to set up a fundable entity. And if we do it right, we can do it within 24 hours. Okay. But that's what the boot camp is all about. Woo! All right. I think we did it there, Scott. And make sure,
so, man. As
make
always,
sure you guys get your Get Fundable checklist. But will you guys drop that again? Drop that again. Get Fundable checklist. Go find out, because we're talking about data points. We're talking about automatic underwriting. We just have to move. We got to move the switches, the dials and the knobs just enough to get our borrower behaviors super fundable. Kevin, is there a way to work with you sooner? Kevin, I'm happy to talk to you sooner. Here's the thing. Let's say you said, hey, I want to be a client. I want to do everything that you have to offer. Still got to go to the boot camp. That is the training that's going to teach you. If we were to work together, you got to not step on the funding landmines. The boot camp is the first step. I don't take clients until they've gone to the boot camp. You got to speak the same language. I've introduced an entire new language. So I hate to be an ass about it, but it's in both of our interests that we know what we're doing together, and then we will we will kill it. I swear to you. Just read the reviews, you guys. Go read the reviews. I don't have to say it. Everybody else has said it. This
2 weeks
is
isn't
so
gonna make
powerful.
A week and a half is not going to make a big difference, Kevin. There's going to be some things you got to do. They're going to have you do some great stuff. They're going to be eye-opening right off the bat. And
Oh, yeah.
don't care whether you got a 520 FICO or an 820 FICO. It's going to be
Yep.
eye-opening, and they can work with anybody out there. And it's proof. We've seen it
Oh
done.
yeah, great thought, Scott. Thank you. And Kevin, here's the thing: if you sign up, if you start your homework, your prep work, there's a prep page. You're going to be busy this week creating the things that you need so that we can complete all of your underwriting evaluation, your revolving accounts portfolio, your entity audit. You got plenty of work to do. And it's so revealing. It's so enlightening. So that's it for me.
Merrill, thanks
Anything
for
else?
coming on, buddy. Thanks again, as always. Say hey to Sky and Cheyenne and Brad and the whole team over there. Jessica as well, too.
Absolutely, man. You be well and have a spectacular evening. Godspeed, you guys, to Scott's Tribe and USREI Network.
There we go. Perfect. All right, everybody. Have a great evening. Get signed up tonight for the special offer. Trust me, show up the first day, don't like it, no questions asked. Boom. If you guys are delivered, they'll be gladly refund you then and let you get back on your merry way. So
Absolutely.
192 million in funding just in the last 2 years for the most part, which is awesome.
5 years, 192. It's 5 years, 53 in a year and a half.
That's crazy. Good stuff.
Yeah, awesome. All right, man. Be well.
See you later, everybody. Have a great evening, everybody. Bye.